Dividend investing in Jamaica. Does it make sense for a small investor? Today we're going to look at how dividend investing would work on a couple of companies that pay very good dividends over the past couple of years. Hi guys, welcome back to my channel. I'm Jamie. Now, if you're new, please subscribe. You can also turn on your post notifications so that way you know every time I upload a new video. I normally upload videos every Monday and Wednesday on investing, personal finance, and business in general in Jamaica. If you want, you can also connect with me on social media. I'm on Instagram at JARadcliffe or Twitter at JARadcliffe2030. We also have a giveaway going on. I'm planning to give away $10,000 to one lucky subscriber. Now, what you would need to do is to find the tickers that I put in the videos, find the meaning of these tickers, and then just comment below the ticker and the meaning of the ticker. If you want more information on that, I'm going to leave a link to the giveaway video in the description, as well as the rules governing the giveaway in the description below as well. Today we're going to be talking about how investing in dividend stocks affect small investors such as myself. And I'm going to see if investing solely for dividends makes much sense in Jamaica. What I'm going to do is to pick a few companies that have been paying good dividends over the past couple of years, invest a particular amount of money, and see what returns I can expect at the end of the 2-year period that I did to see how my investment would have grown. First of all, what is a dividend? Now, dividend is basically just a payment from the company that saying thank you for buying shares in our company. So once they make a profit, they normally pay out a portion of that profit to the shareholders as a thank you gift in a sense. Now, not all companies pay dividends. Some of them will decide to keep all the profits to try and grow the company as quickly as possible. Then you can have other companies who decide to pay out 80% or probably even more of the profits for the company for a particular year. It all depends on the dividend policy of that company. So if you're planning to invest in dividends, make sure you know the dividend policy of the company you're planning to invest in. Normally when you hear persons talking about dividends, you would hear them talk about the dividend yield, which is pretty much the dividend paid out divided by the price, the current price of the security or the stock. Now, what this does is to give you a percentage-based return of how the dividend that is being paid now, how much percent of the current price it is. Personally, for me still, I don't even want to know the dividend yield of a company. Here's why. I'm a very practical person. So I would want to know how much money, exact money, I am looking to get if I invest, say, let's say $100,000 in a company. How much dividends when they are paying out am I going to get in dollars? So am I going to get $500 worth of dividend, $1,000, $2,000? How much? I want to know money terms. So today I choose a couple of companies that between 2018 and the end of 2019, they were paying out very good dividends. I'm going to invest, let's say, $100,000 in each one of these companies and see how my investment would fare, how it would grow by the end of 2019. Now, the cost that I have to pay for each stock is very crucial because the cost that I pay will determine the amount of shares that I get, which in turn will determine how much dividend I'm able to get, because dividend is paid out on a per share basis. So if you bought, let's say, 1,000 shares in any company and they're going to pay out 20 cents in dividend, you're only going to be getting $200 at the end of the day. Now, in Jamaica, dividend payment also attracts tax. It attracts a withholding tax of 15%. So right here you can see where even the $200 that you're getting, is further whittled down by tax. Alright, so the companies I'm going to be looking at is one, NCB. I chose Barita, seeing as it is that they have an APO right now as well. Proven and Carreras. Now, the reason I chose these companies, as I said, they have been paying very good dividends over the last couple of years, and they have been increasing their dividends as well. Now, the first thing I plan to do is to find the price of the stock, like the very first closing price of the stock in January 2018, to see where I would enter into these stock purchases to ensure that I get the best price possible. Now, I don't plan to say, let's say, like increase the position to see if I would get more money and none of that. No, I'm just going to invest one time basically for this little experiment and see how it performs over the couple of years coming up. Alright, now if it is that you want to find the information that I am using, you can pretty much go on the Jamaica Stock Exchange website and do a search for declared. That's all I did in order to find the declared dividends for the period that I want to look into. Now, I didn't choose 2020 because, as we all know, 2020 has been a very rough year, and like companies like NCB, the major banks, have put a hold on dividend, on major dividend payments, right? They may pay out to minority shareholders, but it's not a guarantee, because Bank of Jamaica told them that, hey, we need to keep as much liquidity in the sector as possible and avoid paying out as much as possible. So with that being said, the first one we're going to look at is actually NCB. I can't bet, a lot of us know NCB. It's one of the biggest banks in Jamaica right now. Now, when I checked the price for NCB in January 2018, the closing price was $99.93. Now, with my 100,000 that I plan to spend, I would have gotten about 1,000 shares in total in NCB. So NCB normally pays very good dividend. When I started looking for the dividends, they were paying like 70 cents per share, and then they moved up to 90 cents per share. Now, all in all, they paid about $5.50 for the entire period that we're going to cover. Now, with my 1,000 shares that I bought, that would have netted me an amount of what, $5,500 in total in dividends. Now, if we ignore tax and everything, then I made roughly 5.5% over the years. Now, to be honest, this really is not a very good turnout for my money, because depending on where inflation is, I could be losing value over this time. But we're going to look at the price of NCB at the end of 2019. So if I decide to sell my 1,000 shares, how much would I get for it at this point in time? Personally, the only thing I would look for from NCB is capital appreciation. Now, on December 31st, 2019, one NCB share was being sold for over $196. So you see right here, so you'd have made what, 96% on your 100,000. Coupled with the dividend that we got, we make like, we doubled the money in the 2 years time. So this is where you see how the trade-off is between dividend and appreciation over time will play out. If you really wanted to do dividends for the same period, it would have been better you chose a Scotia. Reason being, Scotia pays almost the same amount as dividend, but their share price is about half of what NCB is. They paid $5.21 per share for the 2 year period, while the stock price at opening was like $52 something. The only drawback with Scotia Bank is that, unlike NCB that pretty much doubled over the same period, Scotia ended 2019 at $55. So you didn't have much capital gains here. So it's kind of hard to invest in Scotia in a sense. Because personally, if me don't make my money from dividends, then capital appreciation is good, right? So you have to look into these things when you're going to do the dividend part. How much you pay per share, who is the better company, who you feel is going to do the better growth over the time period, and so forth. Alright. Next, we're going to talk about Barita. So in January 2018, Barita was selling for $7.47. And trust me, if you would get Barita here, so you're swimming in the money right now. Now, at this point in time, we'd have gotten about 13,300 shares, roughly, give or take, for our $100,000. Barita paid $3.09 for dividends for the 2 year. Now, based on our 13,000 shares, we get like 40,000 in dividends over these 2 years. So you look at like 20% your money going up by per year, right? Now, to be honest, with Barita, this is not where you would have made your money for the period. Now, between 2018 and 2019, Cornerstone bought Barita, and when I checked the price for Barita at the end of 2019, the price was at $70-something. So you see, if you did invest $100,000 in a Barita in January 2018, you're looking at $1 million at the end of 2019. Now, this is where you talk about growth, parabolic growth. Now, we're going to look at Proven. Proven actually has shares on both the US market and the J-dollar market. Now, because I am only planning to invest $100,000, I'm going to look at the shares on the J dollar market. Can't bother with the calculations to get it over to US and then take it back, and it's a whole heap of thing. So let's look at the J dollar side of it, right? Now, proven started 2018 at $25.07. So when we decide to spend our 100,000, we're gonna get about 4,000 units, give or take, but we're gonna work with 4,000 for ease of maths. Okay, one thing I think you guys need to know, though, Proven actually pays dividends in US, and also in essence they're not a Jamaican company, they're incorporated in St. Lucia. So because of this, you don't pay taxes on any dividend that Proven pays you. So for the 2 years, Proven actually paid out 0.0171 US cents per share. Now, this would have netted you about $68 over the 2-year period US. Now, to be honest, no matter what rate you use, $68 US is not a lot of money, to be honest, because if I'm going to use, let's say, 100 to 1, that's $6,800. That's roughly 6.8%. So it's not really good return over the period if you're thinking about dividends, in my estimation here. But if you look on the flip side, Proven ended 2019 at a cost of $46 something. Now, when you invested your 100,000 at $25, right now it would be worth about 186,000. Yep, 186,000, depending on the price you get. So you can see here where you get a lot of capital appreciation from the stock, where your money almost double by the time 2 years up. The last company I'm going to look at is Carreras. Now, we all know Carreras is in the business of selling cigarettes, and normally they pay very good dividends as well. At the start of 2018, if you had gotten some Carreras share, you'd have paid about $11 something for them. Reason being, Carreras had a great run up to about $110 something, and then they did a stock split and bring the price down to $11 something. Now, the first closing price for January was $11.40. So I'm going to assume that I got my shares right there for $11.40. Now, over the 2 years, Carreras actually paid out $1.11 for dividends. Really and truly, it's the lowest one here on our list, but it's there for a reason. When we spent our $100,000, we got about 8,700 shares. And with our 8,700 shares, at $1.11, we made about $9,600 before taxes. Now, as I said before, $9,600 before taxes is almost 10% over the time period. So we make about 5%. But unlike the rest of dividend stocks in my list today, Carreras had one fatal flaw over the 2-year period. The share price dropped. The price of Carreras shares kept falling for the 2-year period, where at the end of 2019 was selling for like $8.19. So if you still had the same amount of shares when you spent your $100,000 and you got 8,700 units, then no, it's not going to be valid at 100,000 anymore. It's currently valued at what, 70-something thousand, to be honest. So it's not all the time we're really and truly able to pick winners, but if you want a good dividend stock, we can see here where Carreras beating inflation and so on, and dividend is coming really steady, but it's just not performing in the price sector. I think probably one of the things is the great run up it had to $110, and then they just did the stock split and it just pretty much got to gravy from there. Now, if you check Carreras recently, even with the corona thing here, currently they're selling for about $6 something. So it might be a good time to pick it up if you're planning to do dividend investing. Before I go though, guys, one thing I need to say, see what happened with Barita, where you could have invested 100,000 and made almost $1 million? It's not something that happens every day. Yes, you can find winners like that hit it out of the park, but you have to be there every day looking for them, and something has to happen to catalyze the price to pretty much boost off like that. For Barita, it was the sale to Cornerstone, because persons were saying that since as it is that Cornerstone is bullish on Barita, then everybody just jumping on the price at this point and just to the moon from there. Thanks for watching, guys. Now, this is basically my look at dividend investing in Jamaica and how it would affect a small investor like myself. Now, personally, based on these numbers and knowing that these are the better companies for dividend investing, I would say it's best to look for some flyers in a sense, or stocks that are looking to take off to invest in, because investing in dividend will not really provide the returns or very good returns for the time period that you're going to be investing for. Barita, with its 40% dividend for the 2 years, would have been a very good call, right? But personally, I think that we need to be looking for our own Barita to ensure that we make those $100,000 investments shoot all the way up to $1 million. Now, if you like the video, guys, please just hit that thumbs up button. Also, if you're not subscribed as yet, please subscribe. And as always, remember, I am not a financial advisor, so if you're going to make any investment decision, please speak with your financial advisor first. And until next week, people, bye-bye.